Hello everyone, this side CA Ankit Bajaj. In previous level, we have discussed about the balance sheet of Tata Motors, and we have seen that how you can read the balance sheet, what are the components of balance sheet. We have discussed about asset, share capital, liabilities, non-current asset, current liabilities, current asset, etc., etc. Right? Today, what I will be doing, I will be discussing some ratios which will give you more understanding about the balance sheet, will make you understand that how you can analyze the balance sheet and how you can find out different important aspect of companies financial performance, right? So these things what we will be doing, we will be doing with the help of ratios, right? So this is the balance sheet which we have already discussed. Now I will be taking few financial ratios, right? Important financial ratios to analyze the balance sheet, right? So you can hear. So first we will be discussing about the performance ratio, right? Now performance ratio will help you understand that how actually company is performing, how company is utilizing their assets, right? So here already calculation is given. So these ratios are for 10 years. So here you can see I have taken the data for 10 years. So we will be analyzing the ratios for the year 31st for the year ending 31st March 2021. So if you see first, our ratio is RA, that is return on assets, right? What is return on assets, right? Now, you know what we do whenever company raise money, what is going to be the first step? Let's suppose you want to start a business. So what is going to be the step, right? The very first step is going to be that you will be raising the money, right? You will be raising the money, right? Now, how you will be raising the money? So there could be several sources, right? What you can do, you can raise money by issuing shares, right? Or what you can do, you can borrow loan, and there are several other, right? But let's suppose you have raised money. Let's suppose you have raised 100 crore rupees, right? Now what you will be doing, you are having 100 crore rupees in your, right? Now what you will be doing with this money, first you will be buying the assets, right? What kind of assets you will be buying? Firstly, you will be buying the fixed assets, right? Fixed asset means you will be buying the land, you will be buying the building, right? Also, what you will be doing, you will be buying the equipments, you will be buying the furniture, etc., etc. Right? Now, what you will be doing, you will be keeping some money for working capital. Now, what is the meaning of working capital? See, what you have done, you have purchased all the fixed assets. You are starting with, suppose, restaurant business, right? In restaurant business, what do you need? You need building, you need furniture, you need equipments, you need refrigerator, etc. Now, what you have to do, next step is going to be that you will be cooking the food, right? To cook the food, right? So how you can cook the food? To cook the food, you require raw material, right? Without raw material, these equipments are useless, these assets are useless, right? So you have to keep some money for working capital purpose. So you will be buying the raw material, you will be paying the salary, you will be paying the electricity bill, and there are several other day-to-day expenses which you have to incur, right? So let's suppose you have decided that 80 crore you will be investing in assets, and remaining 20 crore you will be keeping for working capital, right? So this is how you have allocated your 100 crore rupees, right? Now here what you have done, total money which you have raised is 100 crore, and you are investing this money into fixed assets and into working capital, right? Now you have to find out that you have invested 100 crore rupees into assets, and now you are trying to get what return these assets are giving to you, right? What kind of how much return you are able to generate from these assets, right? So this is what a return on assets, right? So what is going to be the formula? Is going to be return, right, divided by total assets, right? Total assets, right? Now what is the meaning of return here? What is return here? Return generates operating profit, right? Return generally means operating profit, right? Or you can also consider, you can take PAT, profit after tax, right? So now what you're taking PAT. Now here you will see that negative balance is given, right? Here you can see negative balance given, right? Minus 3.75 is given here, right? Minus 3.75 is here, right? How they have calculated minus 3.75? Because you know, if negative figure given, it shows that company is not making profit, right? It shows company is making losses, right? So in this, if you see, I took an example where company has invested total 100 crore rupees into the business, right? They have invested total 100 crore rupees into the business. Now let's suppose in first year company has incurred losses of 350 crore, right? Company has invested total assets of 100 crore rupees, and company has incurred losses of 350 crore. Now if I ask you to calculate return on asset, right? So what is going to be the formula? Formula is going to be profit divided by asset, right? It is going to be profit divided by total asset. So here company has incurred, so company will write down 350, that is minus 350 crore divided by total asset value is 100, right? So you can see here, so the ratio is going to be minus 3.5. Right, ratio is going to be minus 3.5 times here, right? So you can see that company is not able to generate any return from their assets. Company is incurring losses. And so if company has invested 100 rupees into assets, so the loss of company is 375 crore, right? You can see in previous year the return on asset is minus 11.81, right? Again, you can see in previous to previous year, that is 34 March 2019. The return on asset is how much? 3.36, right? So sometimes company is able to generate a return from assets, and sometimes company is not able to generate return from assets, right? Now, there are chances that why company is not able to generate return in year 31st March 2019. The return on asset is how much? 3.36, right? So sometimes company is able to generate a return from assets, and sometimes company is not able to generate return from assets, right? Now, there are chances that why company is not able to generate return in year 31st March 2020, because we know the scenario, right? We know the previous 2 years back or 3 years back scenario, right? If I talk about COVID, right? You might be knowing about the COVID, right? So whole globe was facing this COVID issue, right? So that is the reason most of the companies, they were making losses, right? They were making losses. So you can assume that just because of COVID, was not able to generate sufficient return, right? And still companies is struggling to generate return from assets, right? So if you see the previous year data, so in year 2012, the return on asset was 2.29. In next year, the return on asset was 0.57, 0.66. Then company has made losses in year 2015. So you have to check the reason, right? Why company was making losses, right? So with the help of return on asset ratio, you will be able to analyze that how much return asset providing to the company, right? Now, next, if you check here, so return on equity. What is return on equity, right? So here, what company has done, company has raised 100 crore rupees. Now, company has raised 100 crore rupees. Let's suppose company has issued shares of 80 crore and company has borrowed of 20 crore. Right here, company has borrowed loan of 20 crore and company is issued share of 80 crore, right? Now, what is return on equity? Return on equity means that how much return company is able to generate from equity money, or you can say how much return company has generated for equity shareholder, right? So here now our focus will be on 80 crore rupees, right? Our focus will be on 80 crore rupees, right? Now, what is going to be the formula here? Formula is going to be 80. Right, here we will be taking PAT. Here why we have considered profit, because here we have taken total asset, right? Right now we are taking equity, and whatever fund belongs to the shareholder, that amount we will be taking, right? So we are assuming company has not issued preference shares. So here we will be taking PAT and divided by equity outstanding, right? So let's suppose in my case, outstanding is how much? 80 crore. And let's suppose company has generated profit. Suppose company has generated profit of 240 crore, right? Company has generated profit after tax of 240 crore, right? And equity outstanding is how much? Equity outstanding is 80 crore, right? So here, what is going to be the return on equity ratio here? So that is going to be profit, that is PAT, divided by outstanding, right? So here you can see profit is 240 crore and equity is how much? It is 80 crore. Right, so here you will find the number that is 3 times. This is 3 times here. So you can see the ratio return on equity is minus 13.1. It shows that company. Obviously, here we have found the negative numbers. Obviously, here also you will be find negative number, right? So you can see that equity shareholders, they are not able to generate much profit. Here figure is negative, so you have to be very careful before investing into the company. You have to do more risk, right, if you're planning to invest into Tata Motors, right? Now, what is capital employed? ROCE means return on capital employed. Now, first you have to understand what is capital employed, right? What is the capital employed? Now, if I talk about capital employed, I will write down the formula first. ROCE means return on capital employed. Now, capital employed formula is going to be shareholder funds plus long-term liability, long-term loans or liability, you can say, right? Here we don't have to include short-term liabilities, or I can write down the alternate formula. It is going to be total assets. You're getting the same number. You will be getting the same figure minus current capital. Right? This is the formula. So capital employed means that which fund company is invested into the business, right? So it includes shareholder fund and it also includes long-term liability. Now we are not considering only shareholder funds. We are including long-term liabilities also here, right? Here you can see what company is done. Company has, let's suppose, raised 80 crore by issuing equity shares, 20 crore by loans, right? Now let's suppose this loan include both long-term and short-term loan, right? It includes long-term loan of 15 crore. It includes short-term loan of 5 crore. This is short-term loan that is required for working capital, and this is long-term loan. That is 50, which company has borrowed with a maturity period of more than 1 year. That is going to be long-term loan. Here, if I talk about capital employed, so what is going to be capital employed in this case? Capital employed is going to be obviously shareholder fund. So amount of shareholder fund is 80 crore, right? And we have to include only long-term. So long-term loans are 15 crore. So what is going to be the total here? Total is going to be 95. This is what a capital employed, right? Now return on capital employed. So what you have to do here, you have to take operating profit, right? You have to take operating profit divided by capital, right? This is going to be the formula here, operating profit divided by capital employed. So here you can see some numbers are positive, right? So it is 0.11. It shows this company is generating some return from their capital employed, right? Here it is minus 12.818. So it is due to COVID, right? Due to COVID, all companies, they have suffered a lot, right? So it is negative that just because of COVID. Then see in most of the year, the numbers are positive, right? In most of the years, numbers are positive. In 2015, to check the incidence, then what is the reason why a company is not able to generate profit in 2015? In cases, we have seen that company is not making profit, right? Here you can see numbers are positive. In 2017, also company able to generate profit. So you have to do the research, right? So we will be doing this research in coming sessions, right? So this is about performance ratios. So I have covered 3 performance ratios till now: return on asset, return on equity, and return on capital employed. In next lecture, I will be discussing the remaining ratios. Thank you.